Right, guys, entry methods. Okay, now before I get started here, there are multiple videos on entry methods using advanced candlestick anatomy in the GFX 2.0 tutorial list. Okay, I'm not going to go into massive depth here because you've got all the information and it's just a case of me repeating myself then. But what I want to do is I just want to go through this with you on the 4-hour time frame, because it's a very simple, very easy, very straightforward way of entering the trades with confidence, and high there's a high chance of the trade going straight into profit and being a winning trade long term, or at least get to break even and not losing money. So in terms of dropping to the 4-hour, say drop into the 4-hour, using a 4-hour time frame as an entry method, it's very simple. Okay, so the first thing is obviously you've got your level marked off here. All right, so the level is marked off here. Maybe you've got a 4-hour zone and you've got a daily manipulation point. Okay, obviously you got to wait for the candle to come down. You got to wait for that 4-hour to close. Now there are times when that 4-hour will just ping all the way back up, in which case, if that's the case, then you can either drop down to the lower time frame if there's aggressive buying happening at that level. That would normally be on London Open, New York Open, New York Stock Exchange, 2 o'clock in the afternoon on UK times. Those times you can probably drop down to the lower time frame, but I wouldn't go lower than maybe the 30-minute, maybe the 1 hour. When that aggressive buying starts happening at that level, you can get a very good trade very quickly. But in terms of what we're looking at here, this is 4-hour analysis. So the first thing you want to do is you want to pay attention to the wick coming down. Okay, wait for the closure of the 4-hour, and if we close anywhere around about this level, it doesn't really matter if it breaks above and it closes. The next candle is the most important part, and what you want to be looking for here is obviously it likely to come down and break the previous low, but you want the creation of support. Okay, so in terms of the creation of support, again, look through some of my other videos in the GFX 2.0 FX simplified tutorials, and when this candle faces the opposite direction, this is now the creation of support, right? Because this is a bearish move down. This is now a bullish facing candle, so you've got the creation of support. Okay, and likewise, if you're looking at a reversal from a manipulation point and a 4-hour zone to go bearish, then you'd have a downwards facing candle, which would obviously be red, which will face the opposite way to the previous candle. Right, now once you've got the creation of support, the next thing you want to be looking at is this candle here. Right, so we want this candle to come down, okay, but we want to be mindful that it's not breaking the low of the previous candle wick. Okay, because if it breaks this wick here, there's a very high chance that it's going to continue down, and this level is going to break and price will continue in the direction that it was originally going. Same goes for selling from a manipulation point and a 4-hour level. If this level is broken, then there's a very high chance that price is going to keep going. Right, so when price comes down, we wait for this candle to close. The next candle here would be hopefully the creation of support, and then we need to pay attention to the wicks. Okay, so if we look at this candle, okay, you've seen me go through this many times. Okay, when it comes down, it could come to within a pip of this level, right? As long as it does not break the low, you want to be placing your entries, your stop orders, if that's the way you want to enter. You want to be placing your stop orders above the previous candle wick to the high or the low in terms of selling, and then when price moves past and triggers you in, in this instance there's a high chance it can explode past and go straight to take profit. But in terms of holding your trade for about 3 hours, maybe 150 pips, it's going to take a few hours, if not maybe a day or overnight. It's up to you whether or not you want to hold your trades overnight, or whether you want to close and look for another entry the next day. I certainly wouldn't be holding trades for the weekend. So if it's Monday, Tuesday, Wednesday, even Thursday, holding a trade overnight isn't so bad. But yeah, Friday, close all trades, at least around about 4 or 5 o'clock, and unless you're way in profit, you can trail your stops or whatever. But I'll save that information for another video. So When the candle comes down, wait for the candle to close, wait for this candle to form. Okay, so this may even take until 2 o'clock in the afternoon. The next candle, you want to wait for the wick to come down. If it does not break the low of the previous candle wick, you can place your stop orders above the previous wick high, and your stop loss must go below the previous 4-hour wick. Okay, we need to give this trade room to breathe because it's a 4-hour trade, a 4-hour level and a daily level and a 4-hour trade idea. We need to give it room to breathe because it may just come into profit and then dip back down again and then eventually move into profit and hopefully to our take profit. And that's the same case if you're shorting. Okay, wait for this candle to form. So the candle comes up, wait for the closure. It doesn't matter if it just breaks over the manipulation point or the 4-hour zone. The important part is that we're going to look for the 4-hour to reject this level, okay, in which case we look for 4-hour support to form, okay, and then we pay attention to the wicks. So we're looking for that V shape scenario, okay, where the wicks start to reverse. Okay, you can very easily spot this on the 4-hour. It's not rocket science. There's nothing special about it. It's just you're looking for a reversal pattern on the wicks, you're looking for the creation of support, you're looking for an entry on the break of the high or break of the low, and you're looking to put your stop loss behind the previous 4-hour wick. So that's basically it. Very simple. In terms of taking your profit, you can take your profit whenever you want. You can take it 1 hour, 2 hour, 3 hour. But the idea here is that we're going to be holding the trades, you know, to a minimum of 3 hour or the next 4-hour or daily level in terms of support and resistance, and we're going to maximize our profits. Maybe if you're holding it for the course of the week, you can maybe scale in throughout the week and maximize your profits, re-entering the same trade whilst taking profits off the table as the trade moves in our favor. Right, so any questions on this, guys? There are a lot of videos on advanced candlestick anatomy and the way that the market moves and the way that the market reverses. If you look through the videos in GFX 2.0, FX simplified, yeah, take as many notes as you need and just try and look at this process as many times as possible. And in the next part of this video, we'll take a look at some live examples, and yeah, maybe that will help you get a little bit more familiar with this entry method. Right, guys, so it's all well and good looking at my pretty little diagrams of how this works in theory, but let's take a look at some pretty good examples here on GBP JPY. Okay, so obviously we've got the support. Okay, the support level is a rejection here. We've pulled back off it, and you can kind of see that there are there's another area here. Okay, so the way I'm drawing this 4-hour support is I'm just looking at the highs here, the rejections, pull back down, push back up, push back down, and then we've rejected. So there's actually a trade here if you look at it. Okay, this one is what I've marked. Okay, because as we come down, we've got this big wick rejection, which you wouldn't want to be getting involved with really, because obviously by the time the candle closes, it closes all the way up here. What it's done is taken the low of this candle and it's broken the high. The next candle comes down, does not break the low here. Okay, and this would be a pretty aggressive entry because this is a 50 pip stop loss here. What we're doing is we're covering the base of this candle because this wick is so low. This would have to give us like an 88 pip stop loss, which is way too much in my opinion. So it's a more of an aggressive entry. We cover the low, the body of the candle, okay, by a couple of pips, and then what we're doing is we're just when this candle here breaks the high, okay, that's the entry point, and you can see it takes a little bit of time to get going, but if we were to break this low, you could close your trade early. But as you then follow the price action all the way up, it actually doesn't. The lows don't break on the 4-hour. So let's just move this out of the way a second. Okay, you can look at the low. Okay, then a higher high, higher high, higher high, higher high, higher high. We almost get to take profit, which in terms of this trade, this probably wouldn't have been taken because it happened at 6 p.m. on a Friday. But it's, in terms of price action, it's a good example. Now we've got another example right here. Okay, same principle. Now, what I want to draw your attention to here is the fact that, okay, with this candle here, not specifically, this is the 6 p.m. to 10 p.m. candle, right? So you wouldn't be entering anything here. When you wake up in the morning, it's got 10 o'clock, okay, 2 a.m., 6 a.m. The 6 a.m. candle comes up and it comes down. So this is the creation of support. You don't want to be trading this candle specifically, but what you notice is this high is also gone, okay, and this is also taken this low. So this is a liquidity grab, but what you'll notice then at 10 o'clock is that the candle comes up, breaks the high, and then exactly the same as what I just showed you in the previous example here. The high follows the high, 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 and this one actually goes all the way to take profit. It doesn't actually break the low of this of any of the wicks. Each of the 4-hour candle wicks actually follow each other all the way to take profit. Now we've also got another example here, which is from today. So there's a couple of entries here. This was Friday, okay, so we come down, we purge into this area, and we've got a daily level here, 205 on the point, okay, so you can see clearly that there's a rejection here. Now you don't need to get overly excited and start entering this on a lower time frame. It's completely pointless, because you can get yourself all in the muddle and get mixed up with, you know, is it bullish, is it not? Because if you look down at 1 minute, this could potentially be looking as though it's rejecting, but then it actually turns out that it's not. So we look at this candle here. This candle is the liquidity grab. This candle here is then the creation of support. And what do you notice? This wick here, okay, is lower than this wick. So this is the new high. This candle here, okay, comes down, okay, doesn't break the low, obviously of this candle. So we're now moving up. Once it breaks the high of this candle, this is where you enter. And I mean, this was Friday again, so something around about here, 6 o'clock maybe. At this point, you'd want to be closing your trade. But if we move on into today, okay, we've actually got another example, okay, which is, yeah, very similar. Okay, we've come down. This area now is actually becoming pretty strong support because we've come down into it. We've taken liquidity from here, pushed back up. We've broken the high, price has moved back down, and we've actually created a pin bar, which is one of the things you should be looking for in a 4-hour time frame. We get a 4-hour pin bar, we've got a 4-hour support created here. Okay, as long as this candle doesn't break this low, we're pretty decent here within 50 pips of the low. Okay, we've now got the break of the high here. Okay, so we go a couple of pips above it just to make sure that we're definitely breaking it and we're covering our spreads. When this candle comes down, okay, as long as this low doesn't break, then we've got an entry. Okay, so this low doesn't come down very far. It comes down just below the body of this candle, and on the passing of this high, you can either enter it manually or you can enter with a stop order with your stop loss below here, and then you can either aim for 1 to 1, 1 to 2. That's currently given 1 to 1.4, but I would be aiming for maybe 1 to 2 or 1 to 3 at least. Less trades, bigger profits. So yeah, again, 3 very good examples here on GBP JPY. Okay, I'd advise you now to go through your charts and find daily levels and 4-hour support zones, and just take some screenshots and pay attention to what's happening. You can then filter down to the 1 hour if you want to, and take a deeper look at what's actually happening. But you don't actually need to move off the 4-hour to enter trades in this method, right? There really is nothing to it. So yeah, take some notes, practice. If you've got any questions, as always, guys, just hit me up in the chat room.